at the heart of what I'm going to talk about today is the financial advisor. It's about how do we actually make the financial advisor take both his personal capabilities and technology coming together to actually make a difference, to achieve the objectives for the wealth businesses. So I touched on, the talk about moving very rapidly now into the intelligence age. I think the wealth landscape is changing enormously because of the capability today for us to be able to use intelligence for the financial advisors. And it's not only about the financial advisors. The platform will touch many other functions within the wealth business. And I think the models that are available today is going to make it a lot easier for us to move ahead with implementing solutions. So I'm going to touch on a couple of those examples here. So let's spend 2 minutes on Intellect so that everybody knows who we are, because we haven't really launched wealth aggressively enough in some of the markets here, though we have about 24 clients internationally in pretty large countries. Intellect has been around for several decades. A lot of the earlier Citibank IP, and when I used to run technology and operations for Citibank, it was the global consumer business, which used to be in about 55 countries. I think a lot of the technology was merged into the Intellect businesses. However, the technology has, over the years, as we all know, changed significantly. So we have, customers in 57 countries, 270 customers. There are about 6,000 people. We deal with most of the top banks in some product of Intellect or the other today in the world. The top banks in pretty much most of the countries around the world. But the point I wanted to mention here is the term you see called eMACH.ai. I think that's the way we've summarized the combination of architecture and intelligence. I talked about eMACH. It's event-driven microservices, API, cloud, and headless architecture. The architecture must have those components if I really want to be able to leverage both digital as well as intelligence on top of it. And the .ai, I'm going to touch on a little bit more because that actually helps the architecture deliver embedded capabilities. And I think there's a huge element of the data model that comes along with this. So I think that's a little bit of a snapshot of Intellect. What are we seeing? We are seeing a lot of organizations around the world still sitting in some part of legacy architecture, and adoption is weak, though it's been enhanced significantly in the last couple of years coming out of the pandemic from a digital perspective, because that's what you have to compete or you're in trouble. But the intelligence side is right now in a significant hype cycle, and we have to be able to find the right user journeys and user cases to actually help implement this seamlessly in that architecture. But the other most important thing is getting adoption. So, getting adoption has to be so seamless that the advisor in this case can actually take that service and help them actually take those user journeys. So I think at the end of the day, that combination of that emotive touch between the advisor and the technology to be able to deliver this is not just focused around one part of the financial advisor. It touches, like I said, in several markets, compliance is vitally important. How do we ensure that the right risk profile is available for the right products for the customer at the right time? And how is it delivered? Does it get delivered directly to the customer? Does it get delivered to the advisor to actually push to the customer? I think that whole capability is at the heart of how we really look at it. So I've sort of summarized it in 4 sort of solutions that have embedded AI, which are important. The first is the ability to focus on hyper-personalization. I'm going to touch on all of these 4 themes: hyper-automation, the modern customer experience. What does it mean? And I think the ability to be able to do, the ability to be able to do that efficiently enough, I think, is important. So I think these 4 pieces are vital in the example. Okay, so what do we have on the hyper-personalization. I think the hyper-personalization, the ability for you to be able to identify from your data models to push the right advice to the advisor at the right time, I think is very much an important part of how we drive the architecture for personalization. It needs contextuality and it needs actually personal capability to be able to do that. These are all actual brief sort of capabilities that we built into each of these things. Now on the hyper-automation side, we've got several bots, and we have a set of those bots that we can discuss with you outside when you have some time. And those bots are actually running. Some of them are running on standalone platforms, some of them are running on Salesforce platforms and many other platforms. I think the ability for you to be able to take the bots and run them in different functional areas of wealth, whether it's the operational side or on the customer side, I think is the other important set of use cases that are available today to rapidly deploy. So if then I focus on the compliance side, we all know the importance of ensuring that the relationship manager, when he's actually dealing with the customer, is in a way in which he doesn't sell the wrong products to the wrong customer at the wrong time. There's an independent check on what products are sold to customers. That whole process is highly automated. Today and you'll see later on with things like the GPT type of capabilities, on your own data model, you can today ask a lot of questions of that information to help you with that advice, or from a compliance perspective, whether the compliance has been completed. So I think that's another important pillar that we put in place. And then finally, the fourth one, is that combination of how we take the compliance and the customer experience together to be able to ensure that there is no friction from a customer perspective. I think very often there's a lot of friction in operational dealings with a customer. How do we actually, and statistics say that over the next several years, most of standard operational roles will be eliminated. Some of the intelligence side related to operational roles will also be eliminated, and therefore how do we take the combination of compliance and the earlier one on customer experience to actually make it possible? If I spend a minute on the customer experience side, the ability to get the full wallet information of a customer together, like I mentioned earlier on the panel, is vital. And today there are technologies that can pull data from documents, can pull data from other institutions where you can take information from an open banking perspective and actually build the wallet to actually help advise the customer. I think that becomes a very critical part of. So we've got a couple of use cases here that I've talked about. One is clearly on the wealth side, ESG is important. Now, what are some of the biggest pain points on ESG? There are lots of people who do ESG, there are lots of people who do scores, but the problem continues to be trusted data. How do we actually get the data lineage identified for the company that we are focusing on? How do we actually ensure that the data is then viewed by either an analyst or whoever uses the data to enhance his ability to decide what the scoring should be for the investment that he's doing, whether it's by region, by country, by industry. I think we've created a risk wheel to help him actually understand the data and then take take his decisions or their decisions on the score. So I think most people, will need to be able to tap this more efficiently. That's one pain point. The other pain point we've been, finding on the ESG information is the ability to use that information and ask questions of the data that you've pulled together. So you have massive capability, and we have a demo later on that you will see as a breakout, where you can actually go online and search for more than 6,000 companies, because we already are doing work with one of the largest sovereign wealth funds that invests about 6,000 plus companies. You can actually go and ask questions on each element of the environment, social, or governance of that data in a very generative AI way to actually help the analyst who can't manage the scale of information efficiently. We have intelligent document and data sort of extraction engines coming to put that data together. So I think this technology is only getting more and more easier, but ESG is vital. It's not only vital from a compliance perspective, it's also equally important from a risk management perspective, because it gives you good insights, in a leading indicator sense of what's going to happen with the company going forth. And some of the clients use that very efficiently. The second use case is about smart nudges. We actually drive the smart nudges which is really the personalization to push intelligent, right product pushes to the customer at the right time, of obviously regulatory, keeping in mind the regulatory paradigm. So these smart nudges are really AI solutions for specific product or switches of products and information that actually the advisor can use more efficiently with the customer. And then finally, we've also have a lot of the bots that I spoke about, and we'll be able to spend a lot more time on those bots, because that's a very interesting area, because it's touching different areas, not just for the advisor, but for different areas of compliance and audit. And some of them, by the way, are regulatory required. Regardless of your architecture, you can bring some of this on top of your existing platforms very easily. So these are the edge systems and the user journeys for AI, which I think can be easily implemented. So I just have an example of a small video, which talks about how the financial advisor can ask a lot of information of call reports and prepare themselves for the discussion with the client more efficiently than before. How do we actually drive this forth? Because I think this combination of being able to adopt the technology easily is going to be very important. Otherwise, you don't just get enough traction when it comes to actually usage. So just to end, I think a lot of these tools for different UI, different AI user journeys are today available for us to be able to just take them and use them within your existing architecture. We have to fix some of the data and the data issues related to it. And if some organizations are well underway in that, some are still requiring the effort to do that, I generally believe that that's one part of the agenda that we need to do. The CIOs, not just chief information officers, but chief intelligence officers now, actually have to get that data strategy right to prepare ourselves for the ability to use some of these triggers to make this successful. There's a lot of things in the mind of the financial advisor. The ability to put it all together and actually simply use this. This can be very rapidly deployed in most organizations. And, feel free to sort of go in greater detail with us later on. This team of ours is outside and happy to, take you through some of these capabilities that can be very rapidly deployed regardless of how your existing wealth, technology ecosystem looks like. Are there any questions? Thanks.
Guardrails around the answer that the AI is giving you, so you know that it's accurate. Because I think I've seen somewhere that like ChatGPT has an accuracy of around about 80% if you ask it some guidance questions around financial services. Clearly, that's not good enough level of accuracy for a wealth manager or a bank.
Yeah. So, there's no straight answer to this because I think this is an evolutionary space, but I can only answer to a few areas, right? So one is this whole ESG data and the quality of what is trusted data, and how am I achieving my compliance, or how am I achieving my governance and risk and control requirements to enhance my ability to understand companies I either invest in or I lend to, or so on, right? So the ability to drill down the trusted data and to build the right data consensus models to be able to define the outliers, I think today gives you lineage of data, as we would call it. We will show you the lineage of data and how that works. As a matter of fact, later on we'll spend some time in the demo on showing you how that works. The second part of the question, a second answer to the sort of question, like I said, it's not fully there, is ChatGPT type of models using the power of LLM, which now a whole bunch others are automatically using. Also, you need to be able to have your own security shell of what information of what wealth client can be accessed by whom. So therefore, all the existing security shells on the privacy and the security of the data needs to be followed regardless of whether we put in, the ChatGPT type of model. As a matter of fact, we've always debated whether wealth GPT type thing is something that we'd like to do. But, the GPT tends to give you a flavor of going out there and picking a lot of public data, but you really need to focus on your own data more efficiently. So I think that sort of structure is today very important for most institutions to launch some of these capabilities. So we have to ring fence that quality of the data, and then automatically the quality of the data that you have will define it. For example, one use case, like I said earlier, is to have all the call reports of an advisor captured and extracted, for which, again, you use a lot of AI technologies of NLP and others, to actually pull that information together so that the RM, or the advisor is talking to the customer, he's got the best information of the call reports and what is relevant today for him to be actually having a good discussion with the customer, whether it's for a cross-sell, upsell, whatever model it is. And I think all those journeys need to be able to put together with the data. Okay, so that if you have your good quality data yourself and you're not looking for external data, I think a big part of that issue that you're dealing with is addressed. So it's about getting this model right and then using the data on the model to provide the right input. And, I had a client, very large insurance company, where the lawyer said, this is for underwriting insurance, right? And in that case, the lawyer said, if you make the wrong sort of input, you should be legally liable. And I said, listen, I'm not an autonomous underwriter. I am supplementing the underwriter, and in this case, the wealth advisor, to be able to take a better decision. It's eventually the human that has to take that call based on better intelligence. Is it better than where I was before versus where I'm going to be? I think technology is definitely proving it is. Either it's faster or more it gives you the more right intelligent inputs. I think it's an evolution of ensuring that the data quality is to the level that can make that happen.
Just a quick question around the AI, generative AI, and you've got a lot of global customers, banks, etc. Where do you see the generative AI from the demand side from those customers being most? Is it more compliance, operational efficiency, reducing cost, or revenue through new customers, or just selling to existing client rate?
Yeah, I think different geographies are at different levels. The US has been about growing revenues and how the AI can help, in this case, the underwriter or the businesses drive revenue more efficiently. I think a lot of markets here have an eye on how can I improve my cost efficiency, being more productive, driving compliance along with cost a lot better than others. So risk and compliance and operational sort of efficiency and AI and bots that I was talking about connected to that is important. Asia is growing phenomenally, and the Middle East. The wealth that's being created is significant. So they're actually tackling more on the opportunity to compete more efficiently amongst each other to capture that opportunity. The banks have some bit of an overlay of controls of a bank compared to wealth managers who've got less of the banking baggage. However, the banks are saying, I've got the customer and they do my transactionary account, why can I not extend them to do wealth rather than sending them off to the wealth managers? So there's there's an interesting battle of evolution taking place in different places here. But getting that architecture right, bringing the right use cases so that the business outcomes that I want to achieve are achieved without getting into one long technology cycle of implementation today is a possibility that needs to be studied very carefully and tried to be delivered. And if we've not got our data strategy up, we have to have that in place because all of this will be connected to that in some way or the other. Thanks. Hi.
Hi. During the panel, you mentioned different types of use cases or different types of wealth bands. Could you expand upon that particular?
Say that again?
You mentioned different types of use cases of different wealth bands or different client segments.
Yeah.
Could you elaborate on that, particularly for high net wealth and ultra high net wealth client types?
Yeah. So there's a bank that we're dealing. We implemented something for them on the AWS cloud. They wanted all their retail customers, based on their data intelligence that they felt were not doing investment or wealth management with them, and providing them the ability to have curated funds available to them, very much like maybe what an Ant Financial did in China some time back, and growing their assets under management significantly by just providing a straight-through do-it-yourself capability to tackle the mass affluent, because they have lots of customers who haven't been able to tap the whole opportunity. It's not all products for the mass affluent. It's primarily a combination of mutual fund type industry that makes those SIPs available. The higher you go up, like I said earlier, the type of relationship managers and the type of products that you need to curate to a relationship manager pretty much goes to an open-ended one, finally to the private bank side. So I think that whole cycle of being able to have the architecture to build the products, and there are different levels of intelligence needed for that. But very often people, when they talk to customers, they don't even have a full portfolio view, and comparing the portfolio with model portfolios and all, a little bit on what the video showed, and say, how am I doing? How can I do better? And as I said on the panel, they don't even have a full view of the wallet of the customer, and therefore, how can they actually give them objectives that have the right risk balance based on their risk profiles? I think all of this really is coming together in a sense. Yeah.
So you spoke earlier about how you're moving your developers over to data scientists. So I just wanted to ask you what you thought about the concept of the citizen data scientist. That would be something.
Tell me about the citizen data scientist. I'm not aware of that term, sorry.
Okay, so the idea would be that it would be people working in wealth management that have access to data science tools, so they can form their own analysis.
Yep.
Use their own tools to better.
Yeah, interesting, because there's one of our clients here, one of the largest wealth managers. There are technology platforms that actually let the business user. First of all, we all know that technology is touching every part of the business. If we think that IT skills is only IT, I think I think that cycle is coming to a pretty much an end. Everybody needs to be trained to be able to do things today, and some of our platforms can actually help people manage the processing of certain operational activities at the business level. You don't need an IT person to do it anymore. It's become that much easier to put together. The data science model side yet, I don't think has reached that. I personally don't think has reached that level yet, but I think for some of the smarter guys in the team to be able to tap this is distinctly possible. I mean, the pace at which you can do some of these user journeys very quickly using AI, using LLM is fantastic. I mean, we've never seen that kind of pace of change that can happen. But then you need to look at all the other pieces on data security, privacy, what kind of platforms am I doing, what's my risk, and things like that. So I think it'll get there, but having the right training and certification for our people based on where they come from, I think is important, because AI is going to be used for every area, whether it's going to be in digital sales, digital marketing, every area really in a way. So I think we'll need a lot more skill development coming out of this. And we see that actually in many countries, the education system isn't prepared to do that as well as it should. When the people come out, they need a significant amount of certification, training, and investment, rather, to make that possible.
Hi. I was just wondering whether you're considering controls, because I mean, absolutely data is key to all this, right?
Yeah.
Are you considering controls as part of the input process, but also as part of the output process as well? Because it's just as equally important that we don't end up with, insights or recommendations that are coming out that are either, biased or, pose a security issue or a safety issue, right? Are you considering those two spectrums?
Yeah. No, controls is an interesting, it's a very broad space. So on one hand, the compliance of who's selling what to a customer, what profile, what products, am I, doing all the disclosures to the customer before the customer buys? And I think there's a lot of interesting technologies. And you'll see, as a matter of fact, we have a partner here that we work with, Moxo. They build a bit of combination of being able to use the platform journeys along with capability to hear the conversations and actually define the pieces that are missing from a compliance perspective that the relationship manager or the advisor needs to do and has not done, and supplemented with a reach out if required, rather than go through the standard process of getting somebody to call and do all the checks. So that's one side of control. There are lots of other operational side of controls, which I think there are different technologies around the bots that I was touching on that can actually help address a lot of that from a productivity and a cost perspective. So, but we can spend more time on that. I know we've run out of time. Yeah. Thank you.